Welcome to another episode of Simply Bitcoin Live. I'm exhausted. I just got off a plane from Austin. I'm really tired, but I'm very excited because we have a hell of a lineup today. We're going to talk about Bitcoin mining, and these people are perfect to talk to about Bitcoin mining. Anyways, this is the third episode of the Simply Bitcoin interview series. We're trying it out. We like it. It's a lot of fun. I know it's not as fancy as the whole show, but I don't know, man. We're going to keep doing it. It seems like you guys like it. First, let's introduce one of our guests. How you doing, Ben?
I'm doing good. How are you, Nico?
Good. Happy to see you, man. Last time I saw Ben, we had a mini beefsteak. It was delicious. We were eating some steak. Anyways, Guzman, how you doing?
Hey, doing pretty well. How are you guys?
Happy to have you. And of course, last but not least, Marshall. How you
what
doing,
up,
Marshall?
Nico?
Happy to have you guys. So first, because I know a lot of people in the audience are going to be like, who the fuck are these guys? Well, Guzman, who are you? Why should people care?
Sure. I'm one of the co-founders at Luxor, the CPO, so kind of like building behind the scenes all of the products that we are like known for. And then today it's kind of like a happy day for us because we are celebrating our like fifth kind of like anniversary at Luxor. So yeah, super pumped for this milestone that we achieved.
Oh yeah, happy Luxor birthday, man. That's really dope. I remember when you guys first started out. I don't forget that. I think you started off with that shitcoin Saya, and then that's kind of really how you guys grew yourselves.
We
I
started
remember
with
that.
Saya. Then we went through all of the Saya fork, kind of like
all the shitcoins.
Fucking up Bitmain, their new machines. Then we went into Decred. Kind of like slowly building the war chest.
And now you guys have like 6 to 7% of the Bitcoin hash rate. Is that correct?
Yeah, pretty much like about that. So yeah, we've been consistently mining anywhere from like 6 to 8 blocks a day. So
congratulations.
Yeah, it's been a while.
So that's what you guys should care. This is that Guzman was a founder of a Bitcoin mining pool that now has 6 to 7% of the hash rate. Ben, who are you? Why should people care?
All right, I'm Ben Gagnon. I'm the Chief Mine Officer at Bitfarms. I do operations and strategy for one of the largest publicly traded Bitcoin mining companies in the world. And currently we run 9 different Bitcoin mining sites in 3 different countries, powering about 2% of the Bitcoin network with all hydropower and almost all MicroBT miners.
Hell yeah. Wow, it's a big portion of the hash rate all on this call. Hopefully CI is not looking. Anyways, Marshall. Marshall is an OG. Marshall, who are you? Why should people care?
I am Marshall Long. I have been mining since 2010. Congrats, by the way, Guzman. Good 5 years of working with Nick, man. That's an accomplishment by itself. Shout out to homie Nick. Yeah, I've mined in all kinds of countries. Currently, I'm the VP of Innovation at Rhodium. We have currently online, we just turned on another 40, so it's 175 megawatts of immersion and another 200 coming quickly. So we are trying to stack hash and slap ass, as they say. Looks like Nico died. Awesome. Shout out Puerto Rico Internet.
He's already out. Okay, what's up, guys? What's up? We'll get Nico back in, but I guess, Ben, why should people care? Who are you? What do you do?
Already did that.
All right, I'm back. Sorry, Puerto Rican internet. I apologize, guys. I should have warned you. Anyways, back to the show. Okay, so here we go. I apologize. This is the first time it happened on an interview, but Ben understands my pain, so I don't feel so bad. If it was anyone, if it was everybody that was not living in Puerto Rico, I would slightly feel embarrassed, but I don't feel that embarrassed. Anyways, back to Marshall. Marshall, the early days of Bitcoin mining were probably fascinating. Could you talk a little bit about what your experience was? What type of hardware did you use to mine Bitcoin when you were starting out? And how much have things changed since then?
Yeah, early days. So I started in 2010, and it was just me hooking a laptop up. A friend of mine was like, "Oh, you got to check out this Nerd Money. It's awesome." it was worthless. You could only really get it if you're willing to take like extraordinary risk if you were trying to buy it. So, laptops, and then we moved to graphics cards, and that's when like the whole Craigslist, like my fun times on Craigslist came, meeting sketchy people in parking lots to buy gaming computers because it was cheaper than just buying graphics cards. Because like 2012, 13, the job market in Houston was in a weird place, and so tons of people were just selling computers that they were gifted or built at incredible discounts. And so right around this time is when the first real big GPU shortage happened. And then all the other kind of shit coins came out that you could use GPUs for. And then we moved into FPGAs for a very short time. And then my first ASIC was a Butterfly Labs ASIC. I was one of the few people who received delivery of their Butterfly Labs ASICs. And then I also was king of the grid seeds way back in the day. There's little orbs, and I've got a few on my shelf over here. I'll pull them down in a bit. But yeah, now the world's changed, and maxing your power in your apartment's not enough for most people. So here we are.
Dude,
Marshall, I was one of those people who did get their Butterfly Labs miners way back in the day. So funny to have both sides of that transaction there.
That's right. I'll grab the grid seed off the shelf. This is what I had, because I only had my Butterfly Labs for 2 weeks, and then I sold it for 2x, which was sick. But then we moved to these bad boys, which were grid seeds. You can the guy Bitcoin Dad on Twitter has a mining museum. You can check out more details on his website for that. But yeah, times have changed for sure.
So, dude, the block subsidy at the time, the Bitcoin block subsidy, for anybody that doesn't know, started with 50 Bitcoin. So are you telling me you were being rewarded 50 Bitcoin with your laptop? Is that right?
Oh yeah, and that was early days before Slush was super prominent. There were no pools, and you had to figure out, like, Stratum wasn't a thing. Like, being able to connect very easily to the network was not a thing. Having to use this, I remember something called Reaper proxy, which is like this weird Stratum TCP proxy you would have to use to connect before Stratum came out. Use Slush Pool. Yeah, so 50 Bitcoin blocks was a bitchin' good time.
So what has changed? I'm going to pass it on to Ben. What have you seen? The way that I always phrase it, right, is that Bitcoin hit Moore's law in this expedited way, right? And then it just hit it, and then, for example, the example that I always give is the S9, right? We've been saying that thing has been dead every 2 years. It's dead. This is the last year of the S9, and that puppy still survives. I just sold 4,500 S9s, and I sent them to Venezuela, right? And they were still interested in buying some S9s and mining S9s, and the S9s from 2017, right? So, but in your era, when you started mining, Marshall, the things only lasted 2, 3, maybe 6 months. Could you talk a little bit about that and what that experience must have felt like?
Yeah, it felt a lot more like an arms race back then than it does now. It was literally ever since Avalon 1 came out, then the S1 came out, and then basically all the way until the S9 came out, it was just every 3 to 6 months, something new and better would come out, because people finally had money to get off of the old process nodes and got on newer stuff. So, Butterfly Labs came out with the 65 nanometer, I think, and then people just started chopping through the different process nodes, and doing that so quickly, you really had to pick and choose. And if you weren't the first person to get the new hotness, you're going to be upside down for sure. So making sure you have relations with the right people, and all the other things is it's a big deal.
Absolutely. So Ben, when did you get into Bitcoin mining? And it must have been very different for you. Unlike Marshall. Marshall, I think we all feel this way. Fuck you, man.
Hey, listen, you won't ever understand feeling like, man, spending 1,000 Bitcoin on a laptop, that's a sick deal, dude. You won't know that pain, okay?
Ooh, and I think that's a lesson for hodling, right? I
So
think
much.
that back then those lessons weren't learned, right? Because they were just, you didn't think. It's like everyone in hindsight, everyone's a genius, right? You're looking back, you're like, bro, if I got in back then, it's like, but dude, I think when you
I
got
was
in
just
20,
hyped to send it to people, dude.
yeah,
The amount of Bitcoin
exactly.
I've given away because I'm excited to share with people is sickening.
Exactly. So, Ben, when you got in, you told me a little bit when we hung out, you told me a little bit about your mining story. I thought it was fascinating. What was that like? And kind of compare and contrast that with Marshall. We're around the same age. So you got in during the ASIC era. Is that correct?
Yeah, I got in, because I failed to receive my Butterfly Labs miners. I ended up getting a couple years later. I felt a little bit burned by the Bitcoin mining industry, so I stayed away for a few years. And then when Ethereum came out, I said, this is my chance to start on something new. And I basically just invested everything I had in GPUs and set up a GPU mining farm. And I started doing hash rate sales to high net worth individuals and family offices in Hong Kong. So I'd turn on a built miner. I'd have the hash rate up and running. I'd start leasing it off to people immediately, and I'd use that money to scale up. I did that pretty well for a couple of years and established my own mining farm in mainland China in 2016. That was all GPUs, and then eventually we started doing a bunch of S9s as well. Then in 2017, that just got too difficult with the price rise going from a few $100 in 2016 to $1,000 at the beginning of the year, and then on its way up to 20 grand. The amount of issues and challenges as like a young white kid, living in a Bitcoin mine in an industrial park in mainland China with a bunch of money printers, really, I wouldn't put that pressure on anybody. That was like an exciting time looking back on it, but a really stressful time rolling through it. And then I ended up selling off of everything kind of towards the end of 2017, which turned out to be fantastic timing to get rid of most of that equipment. And I started an immersion cooled mining company in 2018. I was selling immersion cooled containers to flared gas companies back in Alberta in 2018 and 2019. And then I got picked up by Bitfarms a couple of years ago, and joined their operations team and quickly made my way up the ladder here. And yeah, I mean, it's been a long road. It's now almost 7 years of full time, but maybe if Butterfly Labs would have redirected those miners away from Marshall and over to my house, I would have a completely different story.
Oh man, yeah, it's what is the quote by Sailor, right? Everyone gets the Bitcoin price they deserve. A year in Bitcoin time seems like a lifetime. I know a lot of Bitcoiners that got in 2013, and I got in class of 2016, and those 3 years, it's night and day. It's such a big difference. People don't really understand. Guzman, same question to you, brother. I know a little bit about your guys' story. I've seen Luxor rise, which is absolutely awesome. Could you talk a little bit about the beginning of your experience? I know that you worked at Deloitte. Is that correct? So what got you into Bitcoin? That's strange. What's going on there?
Yeah. Well, I guess I have like an amazing story to tell, like these guys like do. But yeah, back in like 2010, when Marshall was like playing with ASICs and or like CPUs and like mining a shit ton of Bitcoin, the only thing I wanted to learn about was to like have beers with my friends. So I got into Bitcoin much later, actually in 2017, before the bull run, and kind of like my proper path into Bitcoin started with Luxor. Late 2017, early 2018. I really got fascinated by like mining pools because mining pools generate the consensus and then combine technology with economics and combine that with like Bitcoin itself, right? So that to me at that time was kind of essentially what pushed me down the rabbit hole, and then from there. We went and built like a mining farm in early 2018, and then that business went under as Bitcoin crashed. We continue to focus on what we do best, which is software and services for miners. Continue to build in the Luxor stack, come with the hash rate index, here in the next couple of weeks, we're going to be launching derivatives to allow miners to trade hash rate. We have, well, we've been secretly working, but it's public knowledge right now, on firmware as well. So there's quite a few things that are exciting here. So yeah, that was kind of my Bitcoin journey. I wish I had like a much better story to tell. But yeah, it's been very tied to Luxor, I would say.
Yeah, so if we were to rate all the Bitcoin journeys, Marshall definitely has the first place. Okay, so I just want to say for the group, Marshall, fuck you, dude. Ben definitely has second, and then I would say Guzman and I are kind of tied for fourth or third place, right? I decided to go the independent route. I've already cried to Ben about this. Totally regret it in the long term, but I like it anyways. You do get a little bit of freedom. Anyways, I'm gonna change it up a little bit. So I'm going to pass this on to Ben because I feel like he's the most appropriate answering this. Then Marshall, then Guzman. So Ben, I think there was insane news really in the last year, right? We heard that ExxonMobil and Gazprom are, I wouldn't say directly, but they are indirectly mining Bitcoin. We know that Gazprom is largest, for anybody that doesn't know. If you don't live in Europe, you probably don't know. Gazprom is the state-owned natural gas energy company of Russia. It's absolutely massive. If you live in Europe, you probably buy natural gas from them. And ExxonMobil, if you live in the United States, you know who they are. How much of a game changer is that? Or am I reading a little bit into the headlines? What are your thoughts?
You know, I think we're going to see a lot of companies do that. I've been having conversations with oil and gas companies since 2018, and you know, there's always been interest. Really, it solves a problem for them that they never really thought was solvable, right? The reason why Bitcoin miners are flocking to that kind of energy is because we're profit maximalists, and in order for us to be profit maximalists, we have to really not compete with other people on our sources of power. If I got to compete with a bunch of other industries and a bunch of other players for that power, it's going to cost me too much just because of the competition. And so I'm looking for that power that's overlooked, underutilized, you know, inaccessible to a greater market. And that's what Bitcoin does. I mean, back in 2018, when I was selling this equipment off to oil and gas companies, Alberta, the whole argument was this is a digital pipeline for your gas, right? If the government won't let you build a pipeline to connect to the market and sell your gas, and even if you did, you're going to get below market value. Why don't you just run a digital pipeline, turn on a Bitcoin miner, and generate a much higher value per unit of gas burned? I mean, it does take a little bit more investment in terms of, hey, you've got to have not just a generator or a turbine, but you also have to have the actual Bitcoin miners themselves and the other infrastructure. But you know, for a lot of these companies, especially if they're a big multinational oil and gas company, that's a very simple, you know, thing to do. They're going to invest millions of dollars, tens of millions of dollars into smaller scale R&D projects just to try and, you know, vet out the math and the economics and how it could possibly be integrated. You know, and the reality is that you're going to see a bunch of Bitcoin miners really integrate vertically through the energy generation, distribution, transmission side of things. And unless you do that, you know, as that block reward continues having, you know, every 4 years, you know, that's going to become, I think, an incredibly more and more important part of the puzzle is having some sort of ownership or access to that energy generation. Otherwise, you're not going to be competitive in the long run. We can't hear you, Nico.
I muted myself, do it all the time. But yeah, I think it's absolutely a game changer. I think, and it's not me that says this. I didn't coin this term. It was Adam O. He believes that all energy companies are going to eventually become Bitcoin mining companies. Would you agree with that? Do you think they'll outsource it? What are your thoughts?
You know, whether or not they do it directly or through a third party, I don't think really matters. I do think that Bitcoin mining as it works now is too volatile for most energy companies to want to be directly involved in it. I think what you'll see is there's going to be some sort of a separation between the speculators in terms of the speculating on the profitability of Bitcoin mining and the operators who just want a consistent revenue stream out of it. And I think once those kind of structures emerge to separate the risk out from the operations, you're going to see a huge uptake on energy utility companies getting into Bitcoin mining when they don't have to worry about, what's going to happen, and they've just effectively locked in that power or their computational value for the next 2-3 years or whatever that is.
Yeah, absolutely. So, Marshall, very interesting, right? I'm glad that I have you on the show. Could you have imagined in 2010 that we are here? And if you could have imagined it, would you have bought that laptop for 1,000 Bitcoin?
Listen, dude, I'm just glad people don't think I'm a drug dealer anymore. Like, the amount of times I've been on an airplane, like early days, talking to somebody about it, the response usually is, Bitcoin, that's like drugs, right? And then you're just like, what can I tell you, right? There's no way for that conversation to progress. So I can tell you, man, it's really interesting to see how large power companies are starting to try to get exposure without getting exposure, if that makes sense. So, like Exxon's not actually mining. I think they partner with Crusoe or something, but because their investors, they think, might skin them alive, right? So they're getting, and they know it's a better way to do business. It's you're compounding your commodities business with another commodity. And I don't know how long that paradigm hangs around, though. I think that you've got a bifurcation in power companies. You've got companies like Shell that have sold off.
That's a very big word. What does that mean?
You've got two different roads that power companies are going down, right? You've got companies like Shell that have sold off their Permian business. I think they sold it to Conoco last year. Terrible timing. They are way upside down on that. And then, so they don't really have much power generation to tap into. And then you've got companies like Conoco that are going, balls deep on burn more fossil fuels and make everybody not poor. So there's an interesting gap there. Now you have other sides of their business, right? Shell's one of the largest lubricant providers. They make dielectric fluids. I'm sure Ben's tinkered around with some of their stuff. So there are other ways to get exposure without just directly mining Bitcoin that these chemical producers, call them, can get access to. But this is something that's fairly new in the States, but it's fairly old. Ben could probably tell you stories of, doing homebouw deals with people in China or Cambodia that are power generation people that instead of selling power, they just let you mine Bitcoin on it. So it's something that's old hat in the Asian market, but that's fairly new and bespoke in the American market. So
that's fascinating. That's very, very interesting. Guzman, same question, brother. Do you believe, right, that energy companies will become Bitcoin companies eventually?
I guess it's really hard to say, but I guess the trend that we've been seeing here is that at like smaller scale power generation companies have been more keen to get mining involved or like integrated into their facilities. Like, let's say I'm a like small time energy producer. Maybe I have some like oil and gas or I don't know, some like windmills, whatever the case may be, a kind of like small scale. And I've been seeing kind of like different farms coming up all over the world. I don't know, 1 to 5 megawatts. And they've been kind of like successfully integrated the Bitcoin mining model with it, but like kind of at scale. What like Marshall and Ben were saying, like none of these big players have like fully kind of like went into like mining. They're kind of like doing through either subsidiaries or investments. Also, I think the competencies from like an energy producer and a Bitcoin miner, although they have some like common points, there's also some like huge differences between. Like, for example, right now I'm like looking at Stronghold, right? They are a power producer as well as like a Bitcoin miner. Right now for them is way more profitable to just sell the power to the grid, right? And they've been an announcement a couple of days ago that they were like sending back to NIDEC, I don't know how many billions of dollars in equipment, right? So for them, which they are like a power generation company, the Bitcoin mining play, at least right now, is not working really well, right? I guess we are in kind of like a particular time in the world where like energy prices are extremely high and Bitcoin prices are extremely low, I guess compared to all-time high. So that makes those dynamics a little bit different. But yeah, I guess to sum up here, it's still to see how it's going to play out. I've seen it successfully more at a smaller scale and not going kind of huge like ExxonMobil or Gazprom going into mining.
Interesting. Yeah, I think it's hard to see now, but it's going to be really interesting to see how it plays out in the next 5-10 years. So to Marshall, a question for you, brother. We saw this year that Intel announced that they were making their own Bitcoin mining chips. I'm going to tie this back in with the beginnings of your journey. Does that blow your mind? And are you optimistic about it? Are you kind of, What are your thoughts, brother?
So my NDA on this just expired, so I can talk about it. So this is not Intel's first chip. I helped Intel make the BZM0 chip in 2015-16. Taped out 5 petahash. When I first got a call from a random person who wouldn't tell me why they were calling, who they were calling for, it was like 6 or 7 phone calls, like a week after week after week. Turns out it was a person vetting me for this like Intel thing. Going into Intel and talking about Bitcoin and working on a Bitcoin chip was super sick. It was so cool. And this is one of the first times I felt like I'm not a drug dealer. This is awesome. So it was a pretty big deal. I lived in Boston. So that chip was made out of their Hudson, Massachusetts facility. And this is the second iteration on it. So I think Intel's uniquely positioned. It was spawned out of something called New Business Initiatives way back then. And that's basically like a venture capital group inside of Intel that funds specific Intel projects. And it was basically just 15 people that were like, you guys want to make a Bitcoin chip? All right, let's make a Bitcoin chip. And that's kind of like how they operate. They were a little bit too early. The conversations were like, hey, can we make $1 billion a year selling this? And, the response is, to date, 900 million's been sold since the beginning, so no. But now, since the market's way more kind of matured and company like Ben's have been, they're publicly traded now, they've got great balance sheets. This is starting to be a little bit more of a thing. Way back when GPUs were going on, AMD GPUs, 2013, 14, it was a huge revenue driver for AMD, but they couldn't say, oh, crypto miners are like the reason we are so profitable this quarter. But now you have companies that are taping out silicon just for Bitcoin, which is super, super sick. And I mean, that's not something to be taken lightly. It's a big deal that a huge company is doing Bitcoin silicon.
Yeah, when again, like my main really, it's just to cover, the way that we framed, the way that we market, it's really the Bitcoin revolution, what's really happening here. And I remember when I heard that news for the first time, I was like, dude, this changes everything. We also heard Samsung getting involved, right?
Yeah.
So is this the beginning of a trend? I think I'm picking up on a trend here. What's going on?
So it's interesting, right? And anybody who's in the hardware game will tell you that the road to tape out is littered with dead bodies. It's an incredibly hard thing to do to make a super competitive product given the current landscape.
Okay.
Intel and AMD and Qualcomm and Samsung have done tons of different tape outs. And so they have true professionals building things. But they're not the interesting thing. I'm not even going to talk about the chip specs. That's a conversation for something else. The reality is, it's the first time a large company who does not have commingled interests is providing IP. What I mean by that is Bitmain, MicroBT, all great companies, but they also mine. They also are a Bitcoin company, right? So I'm a slave to their constraints, right? For Bitmain, their TSMC scheduling. This is not something that, if I call Intel and I say, hey, I need 1 million machines, they're going to say, here's the schedule, here's when I can do it, and here's the price. The price isn't going to be tied to Bitcoin. It's not going to be a price that I'm having to compete with them, because if they sell it too low, they can go and run it in their own data centers. This is the first time we're seeing this paradigm shift of okay, we're a Bitcoin miner and we also run our own chips and we have our gear and we can like run them ourselves if they're not selling for enough money. It's not this like cat and mouse battle where I have to deal with, okay, do you have enough wafer starts that I can rely on? Do you have enough logistics capacity to do this kind of stuff for me? It's much more of a conversation of, here's the price, you signed a big PO, you're going to get that PO. I don't have to have these weird payment terms that you get with Bitmain where, you know, you pay 30%, 10%, 10%, and then they discount it at the end, but you don't get the money back. You have to deal with this weird coupon system. It's the first time that we're going to see a real company who does not have commingled incentives coming to the market with a product. That's why I think it's such a big deal, regardless of the chip specs.
Dude, and I think you hit the nail on the head, right? It's a non-Bitcoin company getting interested in Bitcoin. And I'm going to tie this in with what the question that I asked for Ben, right? You also saw independently, this is not correlated, you saw ExxonMobil and Gazprom also showing interest. Maybe it's not direct, but also showing interest in benefiting from Bitcoin's incentives, right? So I think that was the big deal. And I think you really hit the nail on the head. Now, Guzman, you worked at Deloitte, right? How big of a deal is this?
I mean, I think it's huge because it's the largest like chip manufacturer in the world, right? I mean, they probably make chips for most of the appliances that we have. It's also super interesting because they are only focusing on the chips and not going to be building the ASICs themselves. So you still, regardless, let's say that you can get the location from them, you still need to find someone else or develop the capabilities in-house to put together those chips into hash boards and then assemble your ASIC, right? And like all of that. And there's like rumors that Block might be like doing this. And there's some other folks as well, maybe even like Epic Blockchain, kind of like assembling these miners with like Intel chips. So yeah, I think it's a big deal because of that, because all the things that like Marshall was talking about, like it's going to be different, right? Payment terms, they are not going to be testing your machines for like 6 months before you receive them. I mean, right now when you get like a brand new like S19, it's usually kind of like out of the box, doesn't have like any dust. But even if you go like 3 years ago, like 4 years ago, you got like S17s or like S9s, and then these machines were like coated in dust. Like you knew by sure that these guys were like running these machines for you. They were essentially pre-mining your ASICs, making sure they were running well for like 6 months. And you know that that's not going to happen with Intel, right? So I think it's going to be a game changer for the industry for sure.
Absolutely. You know that Bitmain definitely did some interesting things before you get your miner. I always thought, the first 5 seconds, maybe 10 seconds that you power up your miner and just for the first, how much Bitcoin was that mining Bitmain the entire time? I know it's just a few seconds, but if you combine that over 100, 1,000 machines, it must have been some type of Bitcoin. With the standard mining pool that it has already programmed in there.
Yeah, that pre-populated field.
Yeah.
For sure.
Like it must be getting something. Anyways, we have a very interesting question from the audience. Andrew Williams asked, for anyone, just feel free to jump in. He says, how has the silicon shortage affected mining? And has it affected the new big players, Intel, Samsung, etc.?
I mean, I think the big thing, at least from a miner's perspective, is what it did to purchasing contracts. Before we had the big silicon shortage, mostly the miners were just purchased spot or a couple of months in advance. And then after the silicon shortage started happening, those purchase contracts became long-term, 12 months, rolling contracts, several months in advance before starting delivery. And that really shifted the risk, from the manufacturer onto the purchaser of that contract. And so from the miner's perspective, I think it changed a lot. The China mining ban did kind of reverse all of that, because now the shortage is not on chips, it's on infrastructure. People need rack space more than they need miners. And that's why you see, even today, with the lowest Bitcoin mining economics that we've seen since like October 2020, we are still having people sign contracts for hosting at 7 and 8 cents, which, for me is not something I would ever do. But you know, if you're desperate for rack space, then maybe you'll pay that price. But at the same time, the hardware value is falling. So, you know, seeing the value of that hosting, the charge attached with the hosting versus what's going on with the per terahash, you know, price of the hardware themselves, you can see where the impact really is. And really, there is no silicone shortage anymore. There's definitely a silicone surplus. And you are even seeing the manufacturers, you know, started offering shorter delivery contracts, more spot deliveries and spot purchases and everything else. So they're reverting back to that, you know, original form of sale that we had before COVID.
Gotcha. Interesting. But how much of the you know, the I think it was like 70% down from all-time high. Marshall doesn't care at this point, but you know, for the rest of us that got in 2016, 2017, we are 70% down from all-time high, Ben. So how much of that was not necessarily, you know, the macro stuff, but is more so the price action, right? Because I know, you know, I've spoken to Luxor about, I mean, I've spoken to Guzman about this, right? I think there was a lot of people that over leveraged themselves trying to buy Bitcoin miners, using Bitcoin miners as collateral. Do you think that might have played a part in perhaps, you know, the fact that there isn't a miner shortage? Maybe it had something to do more so with the price than the actual silicon situation. What would you say about that, Ben?
You know, I think anytime that we have a bull market, you're going to have a huge amount of players who are buying equipment that they have no plan on how to deploy. And they're buying it on a speculative basis and looking for a flip. Like I remember when, you know, Ether was really starting to rally. I think this was like February or March 2017. And, you know, you used to be able to buy GPUs, you know, 1 month in advance, reasonable price. And then when things started taking off, China banned the withdrawal of Bitcoin, Litecoin, and a couple of others from the exchanges, and Ethereum wasn't listed in that list of banned coins. And Ethereum went from like $10 to $430 in a couple of months. You couldn't buy GPUs. I mean, I contacted my old distributor, and I bought GPUs from him for 2.5 months straight. And then around April or May, one guy in South Korea bought 100,000 GPUs. It was their entire monthly production. And he asked me, he said, oh, by the way, do you know what motherboards he can use to plug these in? Because this guy has never done it before. You know, and it's like, this is the kind of thing that you see happening. Like, if that price, people are just going to speculate just on the hardware themselves. And in that, it's kind of, you know, a nice function of this market, right? You know, there are some speculators out there. If they can make a bunch of money, great. If they can't make a bunch of money, then difficulty is lower for the rest of us. And, you know, this is how it always happens. I don't think that we should expect to see, you know, leverage leave the system. Really, Bitcoin's not about preventing any of that, right? Bitcoin is just a free market where if you didn't manage your position, then you're going to get wrecked. And it's just a matter of time before that happens, right? So this is a game where, yeah, return on investment is really important, but, you know, so is your ability to withstand some of the worst that the industry can throw at you, because we are going to have 80% drawdowns and 90% drawdowns. We are going to have situations like we have now. But it's about how you adjust and how you, you know, really just manage your risk position. I don't think the speculation is going to go away. I don't even think it should. You know, there are mining companies out there now with 70,000 plus miners on the floor. You know, okay, difficulty is 2% lower as a result. You know, doesn't really hurt me that much. And now if they want to sell their miners, they're going to be selling them at a discount, right? So that's actually a good thing for the people who played their cards right and didn't overextend themselves. Now they have a great opportunity, an opportunity that they would have never had 3-4 months ago.
Yeah, I remember November of last year, my alarm bells started to go off because I started seeing a lot of people on Twitter, you know, the average everyday person just start showing off their home mining operation. I was like, okay, this reminds me of late 2017. What's going on here? So Ben, back to you. Do you think you were mentioning about you were answering a question about the silicon shortage? Do you believe that the situation in Taiwan, right? You know, China's kind of positioning itself like Taiwan is ours, etc. For anybody that doesn't know, the majority of silicon manufacturing is in Taiwan. I know the US government is trying to incentivize that to try to move it over here, but that's going to take years. Do you believe if, you know, worst case scenario, China invades Taiwan, right? You were telling me when we were in person, you were telling me it was another, you believe it's going to be another scenario, but do you believe that could potentially affect, Bitcoin miners, right? Because, you know, if the majority of the silicon is in Taiwan and China takes it over, we know that China is hostile towards Bitcoin mining. And then I'm going to add another component to that question, right? We know that the majority of Bitcoin miners are manufactured in mainland China still, right? So do you believe that could be a potential issue in the next 5 to 10 years?
So we're seeing, you know, a bunch of supply chains being reorganized right now. It's not just in Bitcoin mining, it's across all industries. And the chip is a big part of that. The China geopolitical risk is a big part of that. I mean, with pretty much the exception of MicroBT, who uses Samsung, pretty much everybody is with TSMC. So Bitmain is with TSMC, and you know, they're really the largest player of, you know, in terms of their market share. The reality is, though, is because there is so many extra miners sitting on the floor right now, I don't think it would have a big impact right away. I mean, there'd be a huge lag of miners that the market could roll through. And in the meantime, I think supply lines would shift around. I mean, already what we've seen since the China Trump 301 duties, we've seen supply lines shift out of mainland China into places like Malaysia, Indonesia, Thailand, Taiwan. You know, they can manufacture these machines anywhere. Really, it's the chips that can't be manufactured anywhere. And I think specifically with the chips, everybody understands that geopolitical risk with TSMC. I think it's the reason why TSMC is invested in the United States and outside of Taiwan for the first time in its history for a major semiconductor foundry. This is something that's showing that the writing is on the wall there, and they want to, you know, take that those new node processes, which is the technology that China hasn't been able to steal yet, and they want to move that over to the U.S. in a place where that they can control. But you look at, you know, the diversification that you have amongst the other players, like MicroBT is with Samsung. You know, they produce a reasonable amount of the hash rate. It's not anywhere close to Bitmain's, but a reasonable amount. And you'd see the supply lines, I think, shift rather quickly. And then with the announcements of Intel and others, you know, it's just more of a shift towards the U.S., which is fantastic in my mind because, you know, here, the North America outsourced all of its manufacturing capabilities and all of its strategic advantage on the manufacturing side decades ago when Deng Xiaoping, you know, opened up China and made this something that, you know, Western companies wanted to outsource to. Now the pendulum is shifting back, and it's not just the miners that are happening here now when they're taking over, you know, all this underutilized and largely abandoned old industrial infrastructure in the form of, you know, old warehouse buildings, substations, power distribution, you know, all this sort of infrastructure that's been abandoned or largely underutilized for years. It's all coming back, and it's all coming back for Bitcoin and Bitcoin mining. And this is an important shift. I think geopolitically, nothing could be more important for the United States. This is a very, very important industry to have onshore when you're looking, especially around a 5 or 10 year time frame.
Gotcha. Interesting. So I'm going to change it up a little bit. We have about 20-30 minutes left in the show. And I'm going to ask this question to Guzman because Guzman works at a mining pool. In the last week or two, we saw the Office of Foreign Asset Control for the first time in its history place sanctions, not on an individual, not on a government, but on a technology. And why am I asking that? We know that the Office of Foreign Asset Control at least influenced Marathon or Maripole's decision to release the so-called OFAC compliant blocks that the community so savagely pushed back on. I think that this is the beginning of the U.S. Treasury's attempt to at least mold Bitcoin into the existing financial system where, you know, they have a tremendous amount of power through the weaponization of the dollar, through to at least control or think they control or influence other governments, right? So the reason I'm asking you this, right, is because after the China ban happened, we saw a majority of the hash rate migrate to the United States. What do you suspect are going to be the efforts by the U.S. government to continue with their sanctions, right? What do you suspect those efforts are going to be? Obviously, you know, mining pools are definitely being tapped. What's going on there, Guzman? What can you tell us?
Yeah, so it's definitely interesting to see, and something we are like following very closely, because as being like a U.S. Incorporated company, that's something that you need to be extremely careful with. Definitely, I don't want to end up in jail because if we interact or provide services to like a OFAC sanctioned address, right? But like that we kind of
wait, hold on. You just buried a lead. You just buried.
No,
a lead.
I didn't, because I guess there's two different things that that you could say at the mining pool basis. One is censoring transactions at the Bitcoin blockchain basis. The other one is providing your services as a mining pool to a specific miner, right? Those are like kind of like two different things. So one is your business and you decide who you want to engage with. And the other one is processing like a hash function within the Bitcoin blockchain, right? I don't see, at least right now, how the current regulation, how any agency within the US government could say that for like a mining pool to process a Bitcoin block, essentially validating like a hash function that contains a transaction made by two different individuals that they don't consider or they want to sanction for whatever reason. I don't see how that, at least right now, could have like any kind of like the legal burdens onto mining pools at this stage. That doesn't mean that in the future there might not be like any regulation like prohibiting us to like serve these customers as any other US business. Like, for example, if you wanted to, if you run like a hosting facility, right? Or like Ben, Marshall, yourself, you're like, let's say you guys provide hosting. You cannot provide hosting to like a OFAC sanctioned individual, right? It's the same thing, like providing the service at the mining pool layer. That doesn't mean that we are like censoring anything on the blockchain.
Yeah. So, I mean, so this is something we cover, and we always, we make the argument, of course, you know, we are kind of, I mean, I am Nico Jones at the end of the day, but hold on a second, because what you're saying is interesting. What you're saying is something that we've been theorizing, which is you run a business at the end of the day, you know, that you're extremely vulnerable to government regulations, right? It's basically out of your control, is what you're trying to say. Is that one day, because I, in my opinion, and I'm just using basic game theory, I think it's inevitable. I think it's going to come one day. They're going to say, hey, and why am I saying that? Look, Marathon is a huge company. Why would they just out of the blue say, hey, we're
Marathon walked that back, right? So they only did that for like a couple of weeks.
I'm gonna push back on that too.
So
they did. They walked that back.
So supposedly they did. We don't know what they're doing. I personally, I think they're still doing it. I think they're trying to get into the good graces of the U.S. government. That's my opinion. Look, for anyone that doesn't know, it doesn't mean anything, because an Iranian and a Venezuelan mining pool is going to say, yeah, go fuck yourself, U.S. sanctions. So, and if that block gets added into the blockchain, there's really nothing they could do. The worst thing they could do is slow down certain transactions. But, yeah, of course. Right, so just to kind of zoom out and, you know, give that perspective. But that's interesting, because what you're saying, Guzman, not to put you on the spot, right? It's
feel free to do so. It's fine.
Your hands are tied in this situation, is what you're trying to say. You know, because it's like, what are you going to do, right? If they you know, and then it gets into the whole First Amendment thing, freedom of speech, blah blah blah, this and this and that. But it gets into a whole.
Well, what I'm saying, if that, I mean, we are not there yet, right? So like, there's no reason to speculate. for that to happening, because that's not something that we are doing, or like to my best of my knowledge, no other US-based mining pool or European-based mining pool is doing right now. I don't
That
see
we know of
any transaction censoring at the blockchain. This is something that you could like look into, right? The blockchain is public. Like this information is available to anyone. Yeah, I guess when the time comes, I think it's going to be hugely debated. And I think it's up to us to educate the regulators, essentially why saying this doesn't make sense at all.
Yeah, I think it's going to be a huge political fight. I think that what works in Bitcoin's favor is, you know, the whole better flag theory. Iran is not going to give a fuck about U.S. sanctions. Venezuela is not going to give a fuck about U.S. sanctions. Russia is not going to give a fuck about U.S. sanctions. And any mining pools located in those countries are just not going to care, right? So, and I think the U.S. is going to try to do its thing. Russia is going to try to do its thing. China, we still know that 10 to 15% of the hash rate is still located in China. They're not going to give a fuck either. Anyways, Marshall still going to try to tie this back in. Dude, you got in 2010. Did you think this whole geopolitical mess was going to come? This must be fascinating for you. This must be a dream.
I can tell you that I'm way more interested in the game theory of Bitcoin now than ever. Especially with all the other shitter chains like trying to dog on proof of work and all this other shit. This is like the most juicy time beyond the block wars to just like be a participant in the ecosystem. It's my personal thoughts, not Rhodium's thoughts. My personal thoughts are, I would love to see them try, and they sure as hell are. You know, I think most of the public miners got a request from Congress about like their e-waste plan and stuff, which is fucking hilarious. And there's a litany of other things that just show that the government's like, look, they have basically gone too far, right? The fact that miners are public now means that at least some part of the government is okay with them, right? But now maybe they feel like it's kind of gotten out of hand and they're trying to like poke holes and stuff. And at the end of the day, there's not shit you can do. You can say whatever you want. You can ban it once, but anytime after that you ban it again, it's just admitting defeat. So, you know, China couldn't kill it. The fact that there's still mining going on and the way that the mining is going on in China is fascinating stuff. You know, that there's a lot of really good people doing really good work for the homies in China that are still mining. And I'll leave it at that. But yeah, it's always a cat and mouse game, you know, and everybody that's been in Bitcoin, a lot of people come from a poker background or a high-tech background or a hacker background, and it's always been a cat and mouse game in one shape, form, or another. And this is just like the next step of this. It's just the stakes are a lot higher now. So, yeah, it's getting juicy, and I like it.
It's getting juicy. This is for all the marbles, right? And nation states are now involved. Wow, is it exciting. This is rare from Ben, but I saw him smirk and smile and make all these facial expressions when I was asking Guzman his questions, and Guzman was kind of shaking in his seat a little bit. Ben, what are your thoughts? What are you thinking?
I mean, on the alt-fact thing or on the geopolitical end?
You know what? I'm going to make it interesting, and I do have a drink in me. On Guzman's expressions, what are your thoughts on that?
On Guzman's expressions? I don't...
How like
I mean, that's not what I was smirking about. That's not what I was smirking about at all. I'm not reading his face like that.
Okay, so
what I do think is interesting is that, you know, Marathon did come out there. They did try and do this OFAC thing, and you know, really, I think this is just a case of what is clearly a relatively new miner trying to find its way in this world and differentiate itself. And, you know, probably took what I would say is some bad advice, that this is a great way to differentiate yourself, and they tried it out. And I mean, the immediate pushback was very overwhelming and very quick. And, you know, that just got turned around almost immediately. I mean, it's a whack-a-mole game. You'd never, even if you can implement a law, enforcing the law is a whole nother thing altogether. And that's part of, you know, what Bitcoin miners do, is they jump around, and just with creative structuring corporately across international boundaries and everything else, there's a lot of this stuff that's just going to be impossible to enforce. But on the, Marshall had an interesting comment there with the public companies, and this is something that I think is one of the more interesting angles and probably one of the necessary aspects of Bitcoin that does get a lot of pushback from a lot of the Bitcoin community, is the fact that there are now public companies heavily into the space. There are companies like us, Bitfarms, where this is all we do. We have no other sources of business or revenue really outside of Bitcoin mining. And the reality is, I think if you want to get Bitcoin to the level where we all think it's going to go as a world major monetary asset and medium of exchange, then in order for it to get to those levels, you do need public companies, you do need institutional adoption, you need that institutional investment, because who's going to push back and who's going to be more successful at pushing back on the government and regulation at the end of the day? Is it going to be me or Guzman or Marshall, or is it going to be BlackRock trying to protect their investment into a couple of different Bitcoin mining companies, and all the high net worth individuals that they're managing capital for who now want to invest in Bitcoin? Those are the entities that you want fighting for Bitcoin and going against the government, and saying, hey, look, you're out of bounds here. You've gone too far and you don't really know what you're talking about. Let's inform you, let's educate you, and let's show you why this is a good thing. And I think that's what's happening here with the public companies and the institutional space, which is why it's so exciting to see, more and more companies list, see more and more companies put Bitcoin on their balance sheet, see more and more companies audited by big companies. All this does is improve security, improve trust, and I think is a real big, hedge against government overreach, is all of those institutional investment dollars.
Gotcha. And you think that will protect from, again, they're really just wasting their time. They can't really censor this thing unless there's a giant global world government and they all coordinate at the same time. Even then, all it takes is just that one guy in the middle of a jungle mining that Bitcoin, and the blocks will go through. So, yeah, it's an interesting take, Ben. I like the optimism. Anyways, kind of change it up a little bit. We are coming on the hour mark, but this is a question that I saved for last. Feel free to jump in, gentlemen. Right? We've been seeing a coordinated attack by, perhaps you could say, it's the people that are behind Ethereum. Right? You saw the so-called cleaning up cryptocurrency panel that Brian Brooks testified so greatly at. But it's so funny because all these articles, all these things that are coming out, all this framing is saying proof of work bad, proof of stake good. What's going on there? And you guys are miners, so you guys are going to appreciate this and explain this better than anybody else. Why is proof of work superior to proof of stake? And why are they so hell-bent on attacking proof of work? I know what a lot of you guys are thinking of, save the planet. No, it's not. No, it's not. If you've been watching Simply Bitcoin for over a year, that's bullshit. So, yeah, feel free, any of you gentlemen, to jump in.
Yeah, listen, I've talked about this tons of times since my time in Bitcoin. The current paradigm is, don't go broke, so make sure you're woke type shit. The reality is there's this whole thing about fossil fuels bad, carbon bad, blah blah, all this shit, right? And the incentives are upside down with carbon credits and renewable credits, and look, I think most Bitcoiners are environmentalists at heart. Most Bitcoiners fucking hunt and eat meat and kill stuff to eat. Those people are environmentalists more than most people. That being said, the fundamental problem with proof of stake is people like us in proof of work, we have real assets tied up that are a one-way street. I am pot committed, all in. I have infrastructure that will be useless for anything else. Nobody's going to host, AWS is not going to host at Ben's data center that runs mining. That's just how that is. They're not going to host in a 200 megawatt chicken shack. Just doesn't work like that. You can make the case, deploy more CapEx, retrofit, blah, 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 whatever. But the machines, the infrastructure, the power, the setup, top to bottom is our true proof of our stake that we're willing to work. That is fundamentally interests and incentives aligned with the betterment of the network. Proof of stake is, I own this asset, I get more of this asset, I can sell this asset. You're more liquid, you're less pot committed, you're less incentively aligned with the rest of the network at large. If Bitcoin goes tits up, not only are everybody in this call going to be bankrupt because everybody's got more Bitcoin than cash, our companies are going to be toast.
I don't own Bitcoin. I don't have Bitcoin.
Okay, you're a clown. Our companies are going to be toast, our houses are going to be repossessed, we're going to own nothing. And that is
be happy.
Exactly, because we have actually put forth a real stake that is a one-way street to Bitcoin going up forever, Linda, and that's it. Actual proof of stake consensus mechanisms don't do that, don't provide that incentiveness and that aligned mentality for the rest of the network.
Gotcha. So Marshall, to go back, right, is why are they so hell-bent on attacking it? What's going on there? What is your opinion on it?
BlackRock wants you to not own anything. They want you to rent forever. They don't want you to have any assets. They want to own it all so that they can make you poor and you'll be happy about it.
Yep, exactly. Opti's the in-house conspiracy theorist. What are your thoughts on that, Opti?
Sounds exactly what I say every single day. So I'm glad someone else said it that knows more than me.
Thanks, Opti. Anyways, Ben, what are your thoughts on this, man? Put in your own words. Marshall did it beautifully. I think because again, you always have the technical explanation, a technical definition, but when someone actually is in the industry, experiences, and that's really the fundamental difference, right? Is that all of us, we've bet our life, our career, our reputation on Bitcoin, period. If Bitcoin goes to zero, in a way, we all go to zero. Ben, what is the difference between proof of work and proof of stake, in your words?
I mean, the big thing here is the barriers to entry and what it actually means to participate in the system. With Bitcoin, really anybody in the world, so long as they want to put in a little bit of effort, a little bit of capital, can participate in the system, right? Like, you want to be a guy on, a remote shack in Africa, and you've got like a small little oil well, and you want to plug in an S9 and participate in the system. Nobody can stop you from doing it, right? There's an ability for people to participate at basically any level up and down. And what that enables on the low end of things is just global wide participation and a means for people to escape wherever they are and generate wealth beyond what they can do in that local area. On the high end of things, on the large ends of that scale, it means that if anybody ever wanted to try and take over Bitcoin, the amount of resources that they would have to invest at this point are so unfathomably large. It's never going to happen, right? I mean, if you wanted to go and get a 51% stake today, like, try and get the silicone. Like, even with all the extra miners that are out there now, try and round up all those miners. Try and round up all that megawatt. Try and round up all that infrastructure and rack space. Try and deploy that on time. Try and do this in a way that you're actually going to make money and not lose your entire stack in the process, right? You're investing everything into something that you're trying to take over and shut down. This is a game where even if you invested infinite resources, every 2 weeks the difficulty is going to adjust. If you look at that supply chain of trying to build up to 51%, you're competing with yourself effectively, because everybody else is growing. You're going to raise your difficulty. You're going to reduce your own profitability as you're trying to scale in this way. There's no way for you to reach that level. And so this enables tremendous wealth creation and openness and access to anyone in the world on the small scale. And it prevents hyper mega centralization on the other end of things, which is the complete opposite of what happens in proof of stake, right? Where the hyper mega centralization of finance and funds to go into POS is incredibly, easy to deploy. And on the low end, if you're a guy with, 1 or 2 F, you've got to participate through some sort of a pool or some sort of a third party proxy in order to try and participate in this network and hope that you don't get rug pulled and hope that you don't lose control of your coins. It's a completely different system from the way that they've designed it and what it enables in terms of access to this network and access to this ecosystem. And I think, you know, the big thing here is that everybody is focusing proof of stake and how much electricity that it reduces. I mean, this has never been an issue. Like there's no other industry in the world who's, you know, actively just for the sake of reducing the electricity consumption, actively trying to reduce the electricity consumption, right? You might do it for cost, you might do it for efficiency, you might do it for scalability. No industry in the world is out there saying, literally, I want to have zero electricity consumption because electricity is bad. For whatever reason, you know, they've gone on this hell-bent warpath where, you know, they're not even going to argue with Bitcoin in terms of its merits on proof of work and what that functions as, because they know they can't win that battle. So they choose a battle that nobody else is willing to fight on, which is this electricity angle. And it's bizarre and it's BS on the face of it. Like if you look into Digiconomist, I mean, I've disproven this guy wrong many times. Lynn Alden's disproved this guy wrong many times. Numerous people have, Nick Carter, a bunch of people have proven this guy's a fraud. His data is completely made up. And, you know, this is what is cited over and over again in all these different papers. This is what is the basis for all these newspaper articles. Nobody's actually interested in verifying any of this information. And, you know, personally, I find it rather frustrating because we're a company that's operated on, you know, basically all renewable energy for 5 years. We've mined over 16,000 Bitcoins with renewable energy. And where are the articles about us being, you know, a good player and being responsible? There's zero articles, you know, and we get asked all the time, you know, why is Bitcoin mining bad? And I'll do interviews with mainstream, like, you know, not CoinDesk, like mainstream news articles saying, why is Bitcoin mining bad? I say, this is actually why you're wrong. This is why Bitcoin mining is good for the environment. Look at what we're doing here. Look at the incentives. Look at these real world examples. And they all say verbatim. That's very interesting, but that's not the story we're trying to write, right? So there's an angle there. There's a bias there. They've already generated the headline and now they're just trying to fill it in, right? There's no reporting on any truth. There's no trying to justify it. They're just trying to pick a battle that they think they can win. And unfortunately, you know, they've chosen to go up against probably the most, you know, intellectually strong and motivationally driven group of people that they've ever come across, you know, in the entire history of you know, trying to manipulate things on strings. They've never run across a decentralized group of passionate, intelligent people like Bitcoiners. I think they've chosen the wrong battle, and I think they're going to lose pretty hard. But there's still going to be a bunch of environmental and energy nonsense over the next 5-10 years. I'm sure of it. Absolutely.
They don't understand that we all burnt the ships, you know, metaphorically. There is no going back. What do they have? Anyways, Guzman, same question. What's the difference between proof of work and proof of stake for you? And why is the media so hell-bent on attacking proof of work, but interested in promoting proof of stake?
Of course. So I guess the main difference in like proof of work and proof of stake is the incentives that each of these systems have. With proof of work, yes, there are economies of scales, but there's also kind of like diminishing return as you scale up. So that essentially means that like a miner cannot get too large, right? We've seen like throughout the last 10 plus years of like Bitcoin miners as like different miners like essentially go up and they go bust and so on, right? With proof of stake, essentially there's like linear relationship between how much money you have and how much control you can get over the network. So essentially it's kind of like a pyramid scheme in which the richer get always richer, right? And then you have the Coinbase, the Binances of the world that will essentially control pretty much the entire network. So the, kind of like proof of stake is just fucked from design. Like there's no, how like Marshall was saying, like people that essentially go into proof of stake, they have no stake into the game. And then why the media is so kind of like attacking proof of work and kind of defending proof of stake is because there's just a lot of like dollars coming from like government and like different like funds and whatnot to like promote different like ESG like investments and like strategies and like fund the narrative, right? Like you see that even in the energy markets, right? There's a bunch of renewables that if you remove all of the essentially all of the subsidies, the government subsidies that those like usually like wind or like solar will have, those energy sources become extremely cost prohibitive to do at scale. And stuff like nuclear and hydro become much cheaper when you start removing all of those subsidies by the government, right? And these subsidies not only go to energy, they also go to media, they go to like every part of society, right? They're kind of like pushing this narrative across the entire front. So yeah, I guess I agree with Ben. We should try to fight that battle as hard as we can, come up with data, come up with facts, kind of like show people that Bitcoin mining, it's not hurting the environment. We're actually doing a good thing. Energy consumption is not a bad thing. In fact, if you look over the last 100 years, and if you compare like GDP and energy consumption, there's pretty much like a 1-to-1 correlation. As energy consumption goes up, the GDP of a society goes up. So it basically means that for like a society to flourish, there should consume more like energy. And like usually what Bitcoin miners are doing is increasing the base load of a society. So whenever there's like peak load demand, either during summer or winter, they can like turn down and then they can like give that power back to society for those like peak days and whatnot. So yeah, I guess that's kind of the narrative that we should be fighting against. Like we touch through like a lot of things here. But yeah, like we should be fighting this battle. I'm pretty sure we are not going to die on this hill. We're going to come victorious.
Absolutely. So, I think we are victorious at the end. You're absolutely right, Guzman. This is really narrative trench warfare, hand-to-hand combat, memes, artillery, tweets are bullets, all of that stuff. We will win slowly but surely. Anyways, gentlemen, we are running towards the end of time. I invite you all. We have about 100 people in our Twitter spaces right now, which we're co-hosting with Swan Bitcoin and Represent. I invite you guys to join maybe for 15, 20 minutes. Just go to my profile on Twitter and you could just join the space. I'm sure, some people want to ask you guys questions personally, would really like that. I'm going to put you backstage a little bit because I am independent. I have to pay the bills, so I have to give a shout out to our sponsors. But in the meantime, feel free to join the space. Before I wrap it up, actually, Marshall, where could people find you? What are you working on nowadays?
OGBTC on Twitter, rhdm.com.
Awesome. What about you, Guzman?
At Guzman Pintos on Twitter, and then Laxo.tech.
Laxo.tech. And last but not least, Ben, where could people find you?
Hash Override on Twitter and bitfarms.com.
Booyakasha. Anyways, gentlemen, will I see you on the Twitter spaces?
Yeah.
Awesome. Woohoo. All right, guys. So I'm going to put you guys backstage. I'm going to transfer a little bit to the Twitter spaces, but I have to give a shout out to our sponsors first. First, guys, check out Pacific Bitcoin. It's going to be the largest Bitcoin conference on the West Coast. You can take advantage of the promo code SIMPLY to get 10% off your ticket. $50 off, guys. You want to do that right now. Also, want to give a shout out to Swan Bitcoin, best place to buy Bitcoin, by plebs, for plebs. CypherSafe. Don't use paper. Store your seed on steel. Could you imagine if you lose your generational wealth because you were that guy that stored their seed on paper? Don't be that person. So definitely use CypherSafe. Get yourself a Cypher Grid or a Cypher Wheel. If you've been listening to Simply Bitcoin, you should already be running your own node. There's no better node right now, my personal favorite, than the Nodl. Be your own bank. Run your own Bitcoin node. Visit nodl.eu. Of course, check out Represent Ltd. They make some of the best Bitcoin merch. Simply Bitcoin merch. Soon. I know you're listening, David. Anyways, you can take advantage of the promo code down below to get 10% off. RepresentLTD.com. Also, check out Citadel 21, the best Bitcoin cultural zine, pure pleb signal. Definitely want to go check it out. And of course, Crypto Cloaks, the best 3D printed Bitcoin merch. Get yourself a node case, the famous 3D printed Bitcoin grenade toy. All of that stuff is really, really awesome. You could take advantage of the promo code down below to get 5% off CryptoCloaks.com. Anyways, guys, that was our show. That was the third episode of the Simply Bitcoin IRL interview series. We hope you enjoyed it. We'll see you on Twitter Spaces in a few. Anyways, guys, we'll see you tomorrow for the regular show.